Crypto King is not a financial advisor.
You gon' learn today, you gon' learn today, you gon' learn today. Had to get it off, why not be the boss? Started in Tampa Bay. Life in the matrix will crumble you. Poverty struggle will humble you. Florida State, relocate, pack my bags and I moved to Colombia. Hola mujeres bonitas, they say that it's cheaper to keep her. That's why I learn more than you. Crypto, I'm learning you. Learn crypto TV is turning to. Please don't waste my time. Learn, yeah. Please don't waste my time. Learn today. Crypto TV. Please don't waste my time. Learn Crypto TV. Please don't waste my time. Learn Crypto TV.
Learn Crypto TV family, welcome. Today, let's take a deep dive into the state of crypto as we move into the second quarter of 2025. Cryptocurrencies have come a long way since Bitcoin has emerged back in 2009. But back then, it was wild and an experiment. A white paper that few believed would evolve into a multi-trillion-dollar industry. It is today. Fast forward to 2025, and cryptos are no longer just a niche investment or technology. They are increasingly becoming a part of the mainstream conversation, reshaping the way that we think about money, finance, and even governance. First, let's talk about where we are right now. In 2023 and 2024 were turbulent years for crypto. We saw major market fluctuations, regulatory crackdowns, and high-profile collapses like FTX, which brought renewed skepticism into the market. However, in the wake of these challenges, the industry has become more mature and we are seeing much more cautious yet innovative approaches to cryptocurrency and the blockchain technology. One key development is going to shift from speculative, short-term trading to more long-term adoption. While retail investors were once at the forefront of the institutional investors, they are now moving in and taking more of a measured approach. Big names like BlackRock, JP Morgan, and Fidelity have integrated crypto into their portfolios, bringing both legitimacy and stability into the market. It's not just about Bitcoin anymore. We're seeing growing interest in Ethereum, Polkadot, Solana, and other blockchain platforms that promise scalable, efficient, and decentralized solutions to real-world problems. As we move forward more into 2025, the next phase of crypto will focus heavily on regulation, technology upgrades, and the use cases. Let's break down what we can expect to see for the remaining part of this year. For years, the crypto industry has faced a major challenge: regulatory uncertainty. In 2025, we can expect this to be one of the most significant developments. Countries around the world, from the US to the EU and beyond, are ramping up their efforts to create clear regulations for cryptos. This is vital for the industry's growth as it will help to protect investors, reduce scams, and provide more predictable environments for businesses. The SEC in the US is already taking significant steps to regulate crypto exchanges, staking services, and other parts of the ecosystem. Other countries like Japan, Switzerland have already put clearer frameworks in place, and as a global crypto market grows, we can expect more nations to follow suit. Regulatory clarity will also make it easier for institutional investors to step in and provide more liquidity to the market, which will help stabilize the volatility that plagued crypto for years. One of the most exciting developments this year will be the increasing application of blockchain technology outside of cryptocurrency. While Bitcoin and Ethereum have dominated the headlines, blockchain itself is a much broader technology with limitless potential. We are already seeing blockchain solutions being used in industries like supply chain management, healthcare, real estate, and even voting systems. For an example, in healthcare, blockchain is improving patient data security and making it easier for doctors and hospitals to share patient information securely. In supply chains, blockchain is used to ensure transparency and traceability of goods from production to delivery. By the end of this year, we should expect to see more businesses and governments exploring blockchain solutions, as it is decentralized, secure, and transparent nature offers huge benefits. Decentralized finance, or DeFi, has been one of the most disruptive sectors within the crypto space, and its growth is set to continue. DeFi allows individuals to access financial services like lending, borrowing, and trading without the need for traditional banks. As DeFi protocols become more secure and user-friendly, expect mainstream adoption to increase. Similarly, the Web3 ecosystem, the decentralized internet, will continue to evolve. Web3 aims to create a more open, user-controlled internet where individuals own their data and digital assets as opposed to relying on large corporations like Google, Facebook, and Amazon. In 2025, we're likely to see more decentralized applications, or DApps, and decentralized autonomous organizations, or DAOs, emerge, giving users more control over their online experiences. Another key trend to watch this year is going to be the focus on sustainability within the crypto industry. Environmental concerns surrounding the energy consumption of Bitcoin mining have been widely discussed. As a result, many projects are shifting towards greener alternatives. Ethereum's successful transition of proof of stake with its Ethereum 2.0 upgrade was a big step in reducing its carbon footprint, and more blockchain projects are following suit by adopting more energy-efficient consensus mechanisms. We're also seeing an increase in projects that focus using crypto and blockchain for environmental good. For an example, carbon credits and sustainability tokens are becoming more common, enabling individuals and businesses to offset their carbon footprints or invest in green initiatives. Alongside decentralized cryptos, another major trend to watch for will be the rise of the CBDCs, or central bank digital currencies. Governments around the world are exploring the idea of creating their own digital currencies backed by their respective central banks. While CBDCs won't replace Bitcoin or Ethereum, they represent a new layer of digital currency that's centralized, regulated, and controlled by governments. Countries like China and the EU are already ahead in this race. China has been testing its digital yuan for years, and other nations are working on their own digital currencies, focusing on improving payment systems, reducing fraud, and increasing financial inclusion. We could see a more widespread rollout of CBDCs, especially in developed economies where traditional banking infrastructure is a lack. The impact of CBDCs on the crypto market will be huge, but their introduction could also lead to a greater public trust in digital currencies overall. As we move into the second quarter of 2025, here are some of the top narratives to watch and potentially invest in. Ethereum 2.0 and Layer 2 solutions. With Ethereum's transition to proof of stake and the development of Layer 2 scaling solutions, Ethereum will remain a dominant force in blockchain space. Projects built on Ethereum like decentralized apps or NFTs will continue to grow. Polkadot and interoperability. Polkadot's vision for interoperability between different blockchains is one of the most promising narratives. As the need for cross-chain communication grows, Polkadot and similar projects could play a key role in the future of decentralized finance and blockchain applications. Decentralized identity. With the increasing concerns about privacy, data security, and decentralized identity solutions, this could become a critical narrative this year. Projects focus on giving individuals control on over their digital identities rather than relying on central authorities are likely to see significant growth. AI and blockchain integration. As artificial intelligence continues to advance, expect blockchain and AI to merge in powerful ways. AI can be used to improve blockchain efficiency, while blockchain can provide the transparency and security AI solutions need to thrive. NFTs beyond art. While NFTs initially became popular in the art and collectible space, their potential use cases go much further. NFTs are being used from real estate transactions to digital identity verifications and intellectual property rights management. By 2025, NFTs could be widely adopted across multiple industries. One of the most exciting developments within the crypto and blockchain space headed into 2025 is the increased tokenization of RWA, or real-world assets. The narrative is revolutionizing how we think about traditional assets like real estate, commodities, equities, and even fine art. The idea of bringing these physical, tangible assets into the digital world and making them accessible through blockchain technology has huge potential. Let's explore how this could evolve and why it is an investment opportunity that you need to really consider. Real estate has always been a significant investment class, but traditionally it has been reserved for the wealthy or institutional investors due to high capital requirements. Tokenization, which involves creating digital tokens on the blockchain to represent ownership or shares in a property, could dramatically lower the barrier to entry for everyday investors like you and I. We can expect real estate to become more liquid and accessible to a broader range of people. Platforms like Realty, ProP, and Roofstock are already exploring tokenized property investments, allowing individuals to buy and trade fractional shares of real estate on the blockchain. This could democratize real estate investing, giving individuals a chance to diversify their portfolios with global properties that were once out of reach. Another key trend in this space is the tokenization of commodities like gold, silver, oil, and agricultural products. Commodities have traditionally been difficult to access for retail investors, especially in the terms of liquidity. Tokenization enables fractional ownership and easy transfers of these assets, which opens up a whole new world of investing. For an example, a gold token on the blockchain could allow investors to purchase small portions of physical gold, which is held securely in a vault and verified via blockchain. This approach combines the stability and commodities with the benefits of decentralized finance, making it an exciting opportunity for investors. Investors will also be able to use these tokens in DeFi protocols, adding an extra layer of utility. While NFTs have gained popularity in the art and entertainment sectors, their use case is quickly expanding into real-world assets in 2025. Expect to see these NFT representations of ownership of physical assets such as luxury goods, cars, and even land. Instead of storing the asset physically, the NFT acts as proof of the ownership and can be traded or sold as easily as a digital asset. For example, owning a luxury car might involve possessing an NFT that verifies ownership and allows easy transfers of fractional ownership of high-value items. NFTs also play a crucial role in verifying the authenticity of real-world assets like fine art, reducing fraud in the market. In addition to individual assets, tokenizing entire supply chains It is a rapidly growing sector. Companies can tokenize goods and they can move through the supply chain from raw materials to finished products. This process adds transparency, traceability, and efficiency to the global trade. Blockchain-enabled supply chain networks will become more integrated with tokenized inventories. Companies will use tokens representing inventory that can be bought, sold, or used as collateral in financial systems. This could revolutionize industries like logistics, manufacturing, and even agricultural by creating a more efficient and transparent global economy.